Welcome back, everyone. Our last presenting company is Foothills Exploration, Inc. It trades on the OTC Pink sheets under the symbol FTXP and is an oil and gas exploration company focused on natural gas exploration and participating in the global energy transition. Please welcome its EVP of Finance, Christopher Jarvis. Welcome, Christopher.
Hey, thanks for having me. It's great to be here.
All right, the floor is yours.
All right. Thanks again for the introduction. Good morning or good afternoon, depending where you are. My name is Chris Jarvis. I am the EVP of Finance at Foothills Exploration. First off, thank you for joining us today. We know your time is valuable. Excellent. All right. I'm sure you guys have seen this a couple of times today, but before we get started, just to get this off the plate, any statements made today should be considered a forward-looking statements. All right, so I want to start off the presentation and give a 30,000-foot view of the company. Foothills Exploration, Inc., tickers FTXP, is a growth stage oil and gas company focused on delivering the energy needs of today and tomorrow. The company's principal asset is in the Wind River Basin located in Wyoming. The asset consists of approximately 16,000 acres of highly prospective developmental acreage. Our key initiative is to generate high impact exploration projects focused on oil and natural gas. We also recently announced new energy ventures division that is identifying areas where we can contribute to a viable, realistic, balanced energy mix for a low carbon future. So the next thing I want to talk about is our corporate strategy. As you can see, it is a two-pronged approach. The first one is to meet today's energy needs. And for Foothills, that is oil and gas. You know, as we speak, oil prices are hovering around $85 a barrel. Global demand, oil demand per day has almost come back to pre-pandemic levels, while new global oil supplies struggled to come to the market, especially for U.S. shale producers. Some experts are even calling for $100 oil by the end of the year. For natural gas, which has ripped higher lately, is currently trading near $6 per MMBTU. There's clearly an energy crisis going on in Europe and Asia, as everyone is competing for resources heading into the winter. Here in the United States, LNG exports continue to grow, and with storage levels now sitting below the 5-year average by 4.8%, a normal or even a colder than normal winter could certainly send natural gas prices much higher. So in short, bullish oil and gas fundamentals should provide us a nice tailwind heading into the end of the year and into 2022. The company is also focused on tomorrow's energy needs as well. We believe hydrogen and geothermal will play large parts as the nations from around the globe push for a low carbon environment. For hydrogen, you just have to Google it. You'll see endless headlines about countries investing in major hydrogen projects around the world. Geothermal story is like hydrogens. Countries are investing heavily in geothermal. In fact, the global geothermal power market is expected to have a 5.5% compounded annual growth rate from 2020 to 2027. So that's our corporate strategy in a nutshell. Moving right along to our Wind River update. But before we do that, let me quickly go over the company's assets in the Wind River Basin for those of you seeing us for the first time. Okay, so the Wind River Basin assets for Foothills, the properties are in Fremont County, Wyoming. Net acres is 16,387. Working interest is 100%, NRI is 81%. 100% of the acreage is underdeveloped. It's both an oil and gas play, has multiple pay zones or stacked pay zones. Also, there has been significant production history surrounding our acreage. Our acreage close to Beaver Creek and Big Sand Draw fields that have had a cumulative production of 132 million barrels of oil and over 1 trillion cubic feet of gas. Again, the Wind River Basin is a stack play environment. We had a recent third-party engineering study on the company's Wind River Basin assets, indicated 18 million barrels of oil, 32 billion cubic feet of gas. And that same study also assigned an estimated PV10 of about 372 million. So again, we believe it's a significant number for a company our size. As we stated in prior presentations, we're actively looking to develop this asset and have already started the process, which will lead me to my next slide. So as you may recall, back on October 7th, we announced that we engaged Geochemical Insight to execute a geochemical survey on a portion of the company's acreage in the Beaver Creek East. Today we're happy to say that 194 soil samples have been taken and are in for analysis. Now, if you look at the map that says Beaver Creek East Unit area in orange and white, you can also see how the soil samples were collected. So we're expecting the results over the next couple of weeks. And basically there are 4 objectives for this survey. Basically, we want to reduce exploration risk for oil and gas by focusing on drill target on areas with hydrocarbon seeps that are present. This will also help, number 2, this will also help us focus subsequent seismic and drilling locations moving forward. In addition, and this is an important one, it provides an environmental baseline for the company of natural seeps so we don't get blamed after drilling and stimulating reservoirs out there in the future. And lastly, which you can tell in the upper right-hand corner in the yellow, the object of the survey is to cover the area in that yellow print. So again, we're expecting to have these results back in a few weeks, and we're looking forward to the results. The next update for the Wind River Basin, and what we're going to talk about is 3D seismic. If you remember back at our presentation last April, we outlined several things that we wanted to do for our Wind River Basin assets this year. One of them was to acquire available 3D seismic on a portion of the company's acreage. Well, we've been working with a seismic brokerage firm and are finalizing an agreement currently with ExxonMobil to do just that. If you look at the map on the slide that you can see, the licensed portion of the line is shot from 783 on the north side or northeast to shot point 1275 on the southwest. The total mileage acquired will be approximately 15 miles. And as we speak, and as I mentioned earlier, the ExxonMobil license agreements are being finalized. We're optimistic the seismic data will be in our shop by the end of the month. So cross your fingers. If winter holds off, the initial location will be verified, surveyed, and staked, and for application permit to drill. It's pretty exciting. On to the next slide. All right. The purpose of this slide is to show just how stack play it is. Beaver Creek Field has some 12,000 feet of historical stack pay zones, producing over 73 million barrels of oil from the frontier to the Madison formations. Now, the initial drilling resource play section, which is illustrated by the green line on the map, includes Lower Cody, Frontier, and Maui formations that have very good organic carbon and carry bed horizontal zones expected in the BCE logs, which are shown on the right. Now, the reason why we believe this is very important to understand our Wind River assets is that the recent third-party engineering study that I previously mentioned that indicated 18 million barrels of oil, 32 billion cubic feet of gas, and an estimated PV10 of 372 million does not include the Cody or the Maui shale in its valuation of the company's Wind River assets. So in short, the shale plays, the Cody and the Maui, are not included in the reserve report numbers and valuation. And a continuous resource type play, such as the Cody or Maui, being included could result in a much higher oil and gas reserves for the company. So it's something we'll be looking at going forward. All right, the next thing we're going to talk about Our Illinois Basin transactions, as some of you may or may not know, today we announced that the company, through its direct subsidiary Anaconda Energy LLC, has entered into a participation agreement with Benchmark Properties Limited to develop a prospect in Jasper County, Illinois, and to acquire 50% working interest in the Sears Hauser number 4 well in exchange for paying 50% of the total rework and recompletion costs for the subject well with the objective of recompletion. Now, the parties have identified multiple pay stack zones on a prospect to drill 3,500 feet with a primary objective of the McCloskey limestone. Now, today's announcement is just a continuation of the company's roll-up strategy in the Illinois Basin. Aside from today's announcements, we also identified several other bolt-on acquisitions that we are currently evaluating, which leads me to my next slide. So a corporate update, aside from the activity that we got going on in Wyoming and Illinois. Throughout 2021, the company's management and technical team have turned over a lot of stones. Moving forward, it'll be much of the same. There are 3 areas we are targeting. We are evaluating several potential acquisitions of producing oil and gas properties in the mid-continent as well as the Rockies. Our check boxes are seeking assets with long-lived reserves, low operating costs, and behind pipe upside. The second thing we're looking to do, we're continuing to engage in ongoing discussions with several operators and owners for certain non-core operated interests that they are looking to divest. And lastly, the company's chief objective for the remainder of 2021 is to acquire 1 or more producing oil and gas properties to add to its portfolio. So next slide. All right, New Energy Ventures update. As you remember, in March this year, we announced the formation of a new subsidiary, New Energy Ventures, aimed at participating in the transformation of the energy sector. Since that time, NEV has had significant traction and several initiatives focused on sustainable and energy low efficient carbon future. Today, we would like to update you on one of them, which is our push into hydrogen infrastructure plays. The company has been actively looking to acquire existing gas stations at attractive valuations to generate immediate revenues and positive net cash flows. Post-acquisitions, we would be looking to add a branded retail hydrogen refueling station that would provide 2 to 4 fueling positions per location. And in addition, we're also looking to add 4 to 6 electric vehicle rapid charging positions combined with a franchise dining establishment to capture the user's time. So from a geographical viewpoint, for our gas station acquisition targets, there are 3 check boxes in our process. We're looking at areas with high electric vehicle penetration and adoption rates. We're also looking at stations in key transportation corridors and affluent neighborhoods. And lastly, areas in which consumers have value lifestyles of health and sustainability. So just to recap, post objectives following a successful acquisition, we'd be looking to 1, optimize existing operations, maximize revenues and net profits, add new revenue channels by building fleet business of gas and diesel sales, and add fleet servicing capabilities as hydrogen electric vehicles. Okay, next up, let's talk about the compliance update. For the company's financial filings, we're happy to say our third quarter 2021 quarterly report and financials will be filed with the OTC markets prior to the filing deadline. Again, as we stated in our past presentations, we're extremely focused on keeping our financial filings up to date. We're also excited to announce that the company has re-engaged its historical auditor, RBSM, to conduct audits on the company, audits of the company and its subsidiaries and financial statements under GAAP and PCAOB standards for the prior 2 years in preparation for becoming fully reporting in compliance with the SEC rules and regulations. Obviously, this is an important step for the company towards becoming a fully SEC reporting company and ultimately to resume trading back on the OTC QB. And lastly, we've been getting a lot of inquiries regarding the final payment to First Fire due at the beginning of the month. We have made that payment, and the senior secured convertible note has been retired and terminated. So that concludes our presentation today. Again, thank you for your time and effort. We appreciate your support, and I'll turn it back over.
Great. Thank you for your presentation, Christopher. Okay, so a bunch of questions. Linda Tapia is asking, are you doing any drilling with oil at $80?
That's what we're teeing up the Wind River with. And we're also, the Illinois Basin is also an entree into that. So to answer your question, yes, we're working into doing that. It's not, relatively soon.
Right. Norm Morrison, do you have any plans for hydrogen?
Yeah, that's what we just discussed, certainly. That we have a huge initiative in hydrogen. You take a look at the amount of capital across the globe going into that market. It's huge. Everybody wants to be the next Saudi Arabia of hydrogen. Britain has said it. It's everybody's moving in that direction. So certainly, again, one of our core focuses.
Sorry if these questions seem redundant. Sometimes they come in at the beginning of your presentation and sometimes at the end. So we're just trying to cover them all, so all of our attendees can get their questions answered. So can you give a current update on the current share structure?
Well, we have about 8 billion shares outstanding. And obviously, we've had some dilution, but we're working on, we cleaned up a lot of our convertible debt. We have one more convertible debt holder. We're working to take him out. So, we're working hard. We're executing our business model. Everything that we said we've been doing throughout the year, we continue to do.
Great. Cam C wants to know if you're uplisting to the OTCQB.
That's what we just discussed. We're definitely getting our financials audited. We're working very hard to get that done. We re-engaged our previous auditor, RBSM, and we're looking to get that done shortly. And that's the goal, to get back on OTCQB.
James Piccola asks, can you discuss dilution? Any remaining note holders?
Yeah, as I just mentioned, we have one note holder, remaining that has assisted us in clearing all the other variable convertible debt off the balance sheet that's still in. So now we're in the process of taking him out as well. So it's a key focus for us. We're aware of it, and we're trying our best to take care of it. And I think we've done a pretty good job of cleaning out most of it.
And again, please address the final outstanding count and when revenue will be generated from the oil assets.
The first part of the question again, please.
Can you discuss the final outstanding count and when revenue will be generated from the oil assets?
I don't know if it's one or the same question or not, but as far as, the Illinois Basin transaction today, we're going to get to work on that right away. So I could see oil revenue coming in pretty, in the near future. As far as our Wind River assets, obviously, we got the soil samples coming back to analyze. That's going to be a couple weeks out. Then we have to get the 3D seismic, analyze that, then survey it and see what our best prospect is, and then file for a permit. So that process could take, anywhere between 3 to 6 months.
Connor Lee wants you to go a little bit more into detail regarding your press today, and what could this mean financially for the company and over what period of time?
Are they referring to the Illinois deal?
Yes.
Yeah, if you take a look at it, financially, we're still going through the numbers. We have our estimates internally that we think we can hit pretty easy, some low-hanging fruit. We're also excited that we're working on some bolt-on acquisition acreage in and around the area. So there's a big runway for us to build a pretty sizable block there. We're very excited about it. It's the first step into that part. Our past experience, we've all worked there before prior to Foothills, so we know the area well. So we're excited. It's a big announcement for us today.
Melvin L. wants you to discuss your plan to reduce the authorized shares, or do you think it will not be needed?
I think it's premature to discuss. I mean, we have to obviously take out this last note holder, and that's, until then, anything, projecting out in the future in that regard, I don't think it's more proper. So
Brady Nelson wants to know if you've ever discussed a share buyback.
We haven't discussed a share buyback at this time. Right now, we're just focused on clearing out the convertible debt that we have, executing our business model, generating revenue, getting a diverse fix of oil and gas assets, as well as new energy ventures with their foray into hydrogen and geothermal. So, that's what we're focused on. We're excited. We think we've come a long way in a short period. And we're very excited over the next 6 to 12 months, what we have on the table for sure.
Invest Trade Wolf wants to know what price per oil barrel is considered economically viable for Foothills to keep uninterrupted operations and revenue stream. Question 1.
Well, depending, I guess, where you are. On the Illinois assets, and I have modeled those transactions prior, the operating costs are really low. I think our break-even analysis was like $15 to $20 on those properties.
And are the potential future acquisitions dilutive or non-dilutive acquisitions? And if non-dilutive, how is the company planning to raise capital to fund operations?
Well, I don't believe it's going to be dilutive because, what we're doing is we already have cash in hand. So we're not issuing new stock to get it. But as far as like larger projects like the Wind River assets, certainly we're going to have to find a JV partner or, a private equity or a bank. So we're going to have to do financing on that. Certainly, that would probably be at the project level. I don't see it being at the company level.
Joe Dale says, in the past, the company was looking to uplist and get the share price over a penny organically. Is this still the plan?
We get these questions quite a bit. I can't predict where our stock price is going to go. We want to build value. We think what we've executed and what we've been saying all year, I think we're probably ahead of schedule on what we were thinking and what we presented. So yeah, our goal is to get back on the OTC QB. Hopefully the share price reflects that. That's the best you can do.
Yeah, at Emerging Growth, we're known for our tough questions, and I'm the messenger. Casey Robertson wants to know, after dilution is addressed, can you address how you'll handle the remaining debt?
Are they referring to our last debt holder, I guess?
Well, after the dilution, right? How will you handle your remaining debt?
Well, we're trying to get out of all our debt as far as the convertible side of things. And then what we're looking to do is, again, once we get, the Wind River Basin assets is a game changer for the company. So if we have success in that particular project, I think the doors or the avenues we will have to raise capital are going to be wide open. I think it's going to open a tremendous opportunity for the company. It will open up a lot of doors. I'm sure there'll be a lot of interest from outside investors, institutional investors that are going to want to come in and be a part of it. So again, we just have to execute our plan. We've been doing it. We'll continue to do it. And, like I said, we get that Wind River going. We're very excited about it. I don't want to say giddy internally, but we're pretty happy about it.
Leo Nieto asks, have you started talks with anyone to purchase a current gas or oil producing well? And will you make your end of year deadline to acquire it?
Can I have that first part again? I'm sorry.
Yeah. Have you started talks with anyone to purchase a current gas and oil producing well?
Well, we just announced today that we did. Some of these wells have been producing for quite some time in that basin. So again, once we do the rework and get the work done, there you are. We're in the game. So to answer his question, I would have to say yes. We're already executing it. We announced that today.
All right. And Robert Lindman, how do you plan to raise money when after the convertible notes are gone, and how much money is currently owed? And are you actively looking for an equity partner?
Yeah, like I've been saying all along, we have one convertible holder that's helped us out tremendously about cleaning up the balance sheet for our variable rate convertibles. Now we have to take him out, and that's our next goal. And then again, for equity partner, we're looking at again at the project level with the Wind River assets. We think we're well positioned. We've done our due diligence. We have a third-party geology that's given us an estimated PV value of $372 million. We have quality boots on the ground. Requiring the 3D seismic from ExxonMobil. So yeah, certainly we're going to be with all that in place. And with oil at $85 a barrel, there's going to be a lot of interest for an equity partner, an industry partner, a joint venture to come in and assist us with that.
Scott Fusillo wants to know, will you merge with Exxon?
We'd love to, I guess. Good question. Not sure I know the answer to that.
Any chance of a reverse split?
We haven't even talked about it. Nothing's been talked about internally.
And Devin Billington wants to know, how has the technology progressed for the drone program? And was the note to be paid on October 5th?
Yeah, we're in the early stages with our partnership on the drone program. It's gone quite well. We're excited about it. And again, I think in the corporate update or the compliance update, it's in the slideshow. We did pay first fire off on October 5th. The remaining balance was a little over $700,000, I believe. So that's been taken care of.
We have a few questions about the current debt. How much debt is to be taken out?
I would have to go back and take a look exactly what the convertible debt is on that. I know on our long-term debt, it's like $8 million to $10 million. But the convertible debt, I'd have to go back and double check the numbers on that.
Well, we have lots of questions about dilution coming up, but you have answered them already. If you would like to have some final thoughts on your presentation, the floor is yours, Christopher.
Well, thank you. I appreciate it. Well, first of all our shareholders, thank you for being patient and working with us. We're working very hard and diligently to execute the model. You take a look at the current fundamental picture in the oil and gas market. It's very bullish. Could be a crazy winter this year. So the backdrop is there. We've got a good tailwind behind us. And then you add on the Wind River assets, what we're doing there in the Illinois Basin transactions that we did and announced today. We're very excited about this company moving forward. And everybody on this team is working their tail off to get it done. So thank you for your time, and I appreciate it.
All right. Thank you so much. We appreciate your time and your presentation. All right, everyone, that has been a fantastic conference today. So many thrilling companies from all over the world. We've had Hong Kong, Singapore, and different parts of the United States. So it's always thrilling to see what's going on around these emerging growth sectors. So thank you so much for watching us. Remember, in just a moment, you're going to be redirected to the registration page for the next conference. So you can stay on now and reserve your spot. Now, on behalf of all of us at Emerging Growth, I'd like to thank all of our presenters and all of our attendees and those really great and often tough questions for making this Emerging Growth Conference such a great success. Remember that a complete replay of this conference and all conferences in the past, they're on our YouTube channel. That's youtube.com/Emerging Growth Conference. So please subscribe there. Also, follow us on Twitter at Emerging Growth C. We always post new information to Twitter first. I'm Anna Berry, and on behalf of myself and everybody who made this event possible today, I wish you a great rest of your day, a very successful week, and we hope to see you on here again very soon. Thank you all for watching.